Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for Thursday, the 10th of February, 2022. We're getting on to 8 o'clock, so it's been a long day. Remember, I'm up at 3:30 in the morning, so for me, this is getting on there. And I wrote a long report tonight for my full research people that get my paid research in the futures markets about the inflation story, which brings me to today. We saw the CPI come out red hot at 7.5%. Expected and falling in the range of expectation. Wasn't a surprise. The range going in was well publicized at 7 to 7.6%, came in at the high part. After the report came out, we certainly saw the nosedive in all the stock indices. But then, I don't know, near 10 o'clock Chicago time, they got their footing. They started coming back up. And they kept coming back up. And the market got positive. And it was looking as though I'm going, what the heck? You throw the kitchen sink at the market, you can't break it. And that's when Fed Governor Bullard, the head of the St. Louis Federal Reserve Bank, came out and gave his opinion on the market. And he's of the opinion that it's so red hot that they should call a meeting right now, do a quarter-point hike, do another hike right after that, and keep going until you get a 1% point hike in by July, and certainly in the second quarter be taking the balance sheet down. Then we heard other people joining in for his argument as well, saying, you know, we need a shock and awe treatment to change this. I'm not completely in that school. I know that the traditional way to fight inflation is with interest rates. That's what the favorite tool is of the banks. There are a few other tools, that's it. We know what it was caused by. This was caused by the pandemic. This is all that mass spending and free money, helicopter money, if you will, that the government threw out to people for 2 years, and it's now created the problem we've got. The question is, will higher interest rates stop that or hurt us? And I write about that at length tonight. I've got different opinions than a lot. You got to solve the port issues. Got to get the chain of supply moving. We need people to go to work. We don't need the inflation and higher interest rates. What are these business owners, how are they going to handle that burden? Are they going to really hire more people? I mean, at the end of the day, as a business owner, you're looking at your expenses versus your income. Something's got to give. Is any of this going to change the situation that's happening in Canada, where now they're shutting down the auto manufacturers, which in turn means that used car prices, a big component of this inflation, and while it's been slipping a little bit, this will hold them higher. And at the same time, on new cars, you don't have the parts to make them because of Canada. I mean, I can go on and on. Foreclosure rates, are you aware that they're jumped dramatically, January to January? Realty Track, 29% jump. I know you're going to say, well, that's because they weren't doing foreclosures during the pandemic, the heart of it. I agree. I see it. But that's still, this is what's going on. And with higher rates and inflation, you're going to get another group coming on. It's starting to grow. Is that the top in the housing market? It could be if that occurs, or it's deals that become available to better and well-financed people. I don't know. We're going to find out. When you look at IBM, and remember, I want to be done with IBM by Monday, so I'm going to rely on you to write me on YouTube. Just go there and tell me what markets you want me to cover next. But lower low, higher high, overbought, not in a trend at this point. When you look at the daily chart, and by the way, this is the weekly chart. When you come to the daily chart, you got the pattern of what? Bearishness. Completely different than the other. Lower highs, lower lows with today's action. First objective hit, the 18-day average of closes. Now that you're under that, you've got the trend down, the bias down until you get back over 138.35. Next target could be the 132.42, the 200-day average. And if that gives ground, then you're back into the 128.45 where the market found its support last time. The bears have taken control of the market. You're rolling over. You had an embedded reading. Now, what's an embedded reading? It's when the slow stochastics are going over 80 for several days or more in a row, which you certainly had, and when you finally get a day where the market closes with the red number, the K line as it's called, under 79. When's the only time it can re-embed before it's got to go through the whole building structure again? The very next day. So unless tomorrow is a strong day up, the odds favor that it's lost its momentum, coming down, next target, right there. In terms of the Apple news, I've said I thought it had to consolidate this, but I'm also bullish as can be. Both numbers over 80. Let's keep going. I got to put new batteries in this thing. Over 80. Here we go. Over 80. Over 80. I got my 3 days in a row. So on Apple, there's a key moving average that I'll be looking at in the morning. I think the pros will buy this market, but they will bail on a reading, in my opinion, under 79. I like to let the first 20 minutes to half hour of trading go by. I like the algorithm money to come in nervous or not nervous, hot, not hot money. And then I like to hit the market with whatever I think should be done. So it ties together with my morning subscriber video for the people that get my paid subscriptions. We'll be all over Apple. In XLF, this is where, in my opinion, and I said it yesterday, I repeated it today, it's where I think the pros got out. Out. Completely gone. You're not embedded. I think they wipe the slate and they say, I'll take the money. Disney, powerful earnings, right? Now, we were talking about this last night. I said, this market's got its earnings. It's already overbought. Potential target could be the upper Bollinger Band, but you're not embedded. First time you hit it, you generally see the pros take the money off the table. I don't think that was a very bad call. Now, in here, there's a gap. Wouldn't be surprised if the market tries to fill it, but there's nothing bearish on the chart. It is overbought. It either embeds or corrects that by breaking back down. Then we have a new problem with XLI. XLI did all this work to get up a couple of times to the 18-day average. Watch this. Sucker play. I know people are going to say, well, I'm buying the market. And I'd say, okay, where are you in this? You're already overbought, and you're telling me you're buying the market? That doesn't mean it can't go higher, but I have a filter that I teach in my full charting course. I was a terrible airplane pilot. You would not want to have flown with me. And I just brought out my flight book. My wife did, because she wanted, I don't know why she did. She wanted to look at my hours. She was bringing it up. But it taught me. Here's what it taught me. It taught me trading. And you're going to go, what are you talking about, Ira? Anyone that flies a plane has a checklist before that plane takes off that they're going through. And it's typically written, just so you'll know. You wrap it in plastic, you protect it, and you're going through everything, because once you're in the air, it's too late. You want to get everything done. Well, that's the same as trading. Before you put the trade on, you check your filters. As a beginner, you're probably going to have to make a checklist, because you're going to forget it. As a pro, I know it, but guess what? I swear to you, before I put out any trade, I review. It's the same as the checklist. Got it all laid out there. I won't make the trade. Even then, I'm going to be wrong. Who isn't wrong trading? But I'm going to be, at the end of the day, I'm here after 52 years. How many people do you know are? That's the difference. Higher lows, higher highs, momentum still up, market doing its thing. I'm still targeting here the 100-day average, 103.29. This isn't a bad-looking chart, or is it? That's why I did this. You have your outside day down today. So the market couldn't get up there, and it's sort of stuck right now. The trend is up. Now the bias is down, and the market stalled. In order to get something going, you got to take out the highs of today. And until that's done, you're probably going to churn in this market. Semiconductors, same thing. You didn't get strong enough to get up there, and you're overbought. You may have lost the window of opportunity, because the weight of the market, if it goes down off of more fear going into the weekend about Fed hikes and what all this means, because you know the bears are coming out of the woodwork now on all this, how many hikes we have to have and all that. Psychology might put the market in that place. In the home builders, no surprise that the market failed at the 18-day average. What's the one thing that we're fearful of? Higher mortgage rates. That turns off the market. It turns off the market not because the rate's higher, but each time it goes higher, you make X amount of money. The bank looks at it. Maybe you won't qualify. Now the homes, the inflation's hitting it, so the Johnnies that didn't get it, and the Bills that didn't get it, and the Toms that didn't get their home, they're chasing after it, and I still expect a strong spring, but, the word is but, it's getting more expensive to buy what's out there, even with the foreclosures that are going on. When you come to the energy sector, if you lose the embedded reading, be careful. Then you're coming back over here. Now the futures have lost the embedded reading. I'm surprised you didn't do that here. You now have the trend down. You got lower highs and lower lows. You're still over the 18-day average. The trap for the people that are bearish happens if you take out today's high, which was 69.74. Then you have the possibility of going right back to the upper Bollinger Band. You call it a bear trap. By the way, in today's live webinar that we had, I showed people some of the work I'm doing on that. So I'm developing all that now. I've got to finish all the PowerPoints. From the PowerPoints, the video, I record the PowerPoints as a video. But then I give you massive amount of examples. That's how I teach. You see it in the PowerPoint, and then I take you to the real world and I show you the setups one after the other, and that's how you start learning what they are. And then in the mornings in my live webinar, they're not webinars, they're my live videos. For me, they're live. For you, you see them at 9 o'clock, 9:30 in the morning, whatever. I'm reinforcing it over. Here's one of those patterns. Here's that pattern. Here's that pattern. Boom. Just like the enhanced Bollinger Band. Okay. So I'm watching that, and I'm watching it hard to see what's it going to do right here. In the gold market, okay, is this where the market's going to peak out? The futures got hit pretty good tonight. They're down $11 as I'm doing this right now. So why? Because the market's been going and oscillating between, higher U.S. interest rates. Well, that put the dollar down recently because it's terrible for the U.S. economy. It's going to slow it down. Dollar's going to get hit. But the first impact of hearing Bullard and other people like him that are going to come out and make their argument, and they're good arguments. I mean, I am not against what Mr. Bullard is saying. You're not hearing that at all. I get his argument. I just don't accept it for what it is. But that's what Fed people do. They use their tool. The tool's interest rates. And by the way, they only have two mandates, inflation and full employment. Inflation's up there at a 40-year high. Do I think he's going to say, no, we can afford to wait? Maybe it'll go to 9%, but it'll eventually fall. No, I expected him to do what he did, and I applaud him for it, and I get it. Doesn't mean I agree with it. But looking at the market down here, well, we'll see what happens. I think it is going to pull back and go to that 18-day average. GDX, I think that this could have been a problem for the market. I now don't think you're going to make it up this high. I know the trend is up, bias down, we'll see. I'm basing it on what I'm seeing on futures tonight. If they turn, I'll turn. XME, first challenge of the upper Bollinger Band. In unison, my little people out there, what do you do on the first time you hit a Bollinger Band if you're long the market? And certainly this market set up some buys. Okay. What do you do in copper first time you hit it? Same identical thing. The pros came out. TLT, this is the Gorilla Glue trade. What the heck do I mean by that? You know how strong for most of us Gorilla Glue is. Now believe me, there is industrial strengths too. But for most of us, it's the strongest of those typical glues that we can buy without mixing them together and doing all that type of thing. And that's what you've done. You hit the Bollinger Band, you get back over it, you hit it, it's either side, and the market doesn't let you get in off of that. It just stays down there. No rallies to speak of. That's what you've got in this particular market. And last, in the euro, the market got back to an objective, the 100-day average. It's been there, and it's having problems right now. It's overbought. I think the pros came out of that as well. Now, I'm proud to say, this is brand new, so don't run on me. We have now got our new app done to give you SPDR, ETF, and stock quotes. So now they work in our phone app. We've revised the app. My videos come popping in like this. My written research is all in here for the subscribers. 2 views that you can do for quotes. And unlike so many of them, because I have a bunch of them, they don't show you the open, high, low. We do. We show you all the information. These charts put all the studies I have on them. You can do just about all of them. What about my videos for my subscribers? Here they are. They play right through it for you. Here's how our news looks. The ones we write, these are the headlines, then you open them up, and here's the special government reports, all with graphs and everything. You're driving your car, just tell it, just like you do with Alexa. Hey, play my quote file. It's going to play it right for you. So now you're driving and you're not looking at the screen. It's telling you where the markets are, and it just keeps rotating it right through. How do you get this? And it is free to you. All you need to do is go to our website. Under free offers, it's there. If you have questions, go here. You're going to need a user ID and a password. We will issue you that after you sign up for your offering. It's that simple. No credit card. We're not doing any of that. And away you go. Okay? I think you'll love it, especially for your stocks and everything else. That's all I'm using now. I'm Ira Epstein. You have a good day, and I will talk to you